All right, good morning, traders. Welcome to this live intraday strategy session. Today is Thursday, April 1st. First day of the second quarter. Great to be with you guys all this morning. Hey, Jay, Pete, Sharif's in the house, Ted, Tiffany. Great to see you all this morning. So thanks for coping with me this week with an abridged version here. The webinar schedule has gotten jacked up a little bit, but we're back on. Interesting developments to start off the month. So as I always tell you guys, right into the start of the quarter, specifically the month, but more pressing the quarter, those changeovers, those crossovers can be really treacherous. So didn't get anything unusual per se, but we did get those extended stretches. So the dollar stretching into resistance, euro just ahead of support there. We'll talk about those levels, dollar yen, gold, Kiwi dollar, dollar Swiss, Aussie dollar, dollar CAD, and sterling. If there are any other requests, I will take a look at peso just because we are at big support. I haven't been involved in it, but do let me know if you guys have any questions on that. And as always, any other questions or trade setups, guys, feel free to throw them on the message board at any time. Hey, Jay, Agnes, great to see you guys in the room. All right, so here's where DXY was right into the open of the week. This was on Sunday night. We were looking at really the break above the 92.46 barrier as keeping the focus higher. 93 and 93.55 is really what we were looking for, a little bit larger of a stretch, maybe a little bit more of a profound exhaustion trade. Here's the weekly, okay? Once we broke that 92.30 barrier, it's been a pretty much crazy straight shot higher, 3 weeks up. This was the first level I talked to you guys about on the webinar on Monday and again on Wednesday on Daily FX. The basic trend line extending off the 2011 lows. Support, 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 break. We're there at resistance. The 75% parallel, the pitchfork off the highs from 2017, 2020, we're there, right? So the weekly chart, I mean, I watch the weekly close. You would need a surmountable close above this region to continue favoring the long side into the open of next week. Remember, we are heading into a very interesting time period. Tomorrow is going to be Good Friday here, so equity markets will be closed, bond markets will be open. We still do get the release of non-farm payrolls, which is expected to print at somewhere in the range of 650,000. Don't know if all of you were in the webinar on Thursday or on Wednesday yesterday, guys, on Daily FX, but just a quick reminder that the discrepancy of the expectations for non-farm payrolls is massive, right? Standard deviation is like 180,000 or something. So the larger that discrepancy, the variant in the expectation, the more propensity you are to see a larger market reaction, right? Remember, when we're trading these releases, we're trading the deviation from the expectation, not necessarily whether the print was, at or not. So all things held constant, the immediate dollar rally may be at risk here into the open of the month. Next upside levels we'll need to take note of is the 2016 low we closed, that's 93.88, and this is the big whopper, 94.47, 94.65. Obviously last year's opening range low, we pivoted and tested it right again. It's a basic 38.2, that entire drop. So that's in your next sort of major zone. All things held constant, again, you're at resistance right here. Momentum knocking on the door on 60, right? That's the daily chart. Or excuse me, that's the weekly chart. Here's the daily. A little bit different of a picture in that the near-term slope puts us just shy of upslope resistance. Again, there's that 1618. Would love to see a strike into that zone. Didn't quite get it. Here's the start of the month, right? So it's the same setup as we were talking about some of those Euro crosses and some of the other majors yesterday. You could see a little bit of a setback into the start of the month for sure. We're coming off of trend extremes, but that would all still be within the confines of the uptrend, right? So first major support at the parallel, you're looking at like 92.90. Major support, 92.46. That's the 236 from the drop. It's the March opening range high. It's the 200-day moving average. In case all of that wasn't enough, It's the median line. So that's my line in the sand for DXY, even if we do see a steeper correction to the start of the month. Resistance is 93.55, a breakout above the upper parallel, and then you're on to that 94.40 target, 94.50 target. Any questions on DXY? Unemployment rate tomorrow is expected to go to 6% from 6.2. Okay, so another improvement. As I always note to you guys, heading into this release is we'll be sure to watch the broader labor force participation rate. When labor force participation tends to contract, it'll put artificial downward pressure on the unemployment headline figure. So we want to make sure, we came in at 61.4% as labor force participation. Watch that number closely tomorrow. Sharif saying dollar yen when you can. It's on the list. I got you, Sharif. No worries, brother. That's number 3. Let me just hit euro real quick after this. Well, first, here's the DXY scalp. So that hasn't changed. Levels have been clear. Like I said yesterday in the webinar, a lot of these trades, guys, they're just losing Momo. The momentum's fizzled out. Here's the start of the week. 93 broke with pretty nice pressure. It's now support. We tested that yesterday, and we are in this little consolidation. Again, you could get a stab into 93.65, but the general consensus, or at least on my end, guys, is to look for near-term topside exhaustion in $1. Ultimately, we'll want to buy that. But at the moment, heading into the close of the month, you're at risk into 93.55. Now, let's say, tomorrow non-farm payrolls blow out, right? You get a print of 700,000, unemployment drops to 5.8, right? Something radical. If we do press, keep in mind, a breach of uptrend resistance, we always say, can oftentimes be the sharpest part of the move. So in such a scenario, I think you can make short order, of 94.50 on a breakout. But that's conjecture here or there. I'm just letting you know at this point, risk is for a little bit more of a pullback well below 93.55. So what does that mean for euro? Any questions here on DXY? Here is euro dollar on the weekly, and here's what euro looked like last night. I'll come back to the scalp in a moment. Big support was what? 16.95. We've talked about it for months, ever since the break. I guess not months, ever since the early break that we made below the 20 handle. That's our first major support zone. The low that we registered so far was 17.04. There is an extension here. I'll show you on the intraday charts in a moment, but just want to show you the extent of this level. Super simple, basic 38.2 retracement, nothing fancy, right? Super simple, basic trendline support, nothing fancy. 1, 2, 3 touches right back here in May of last year. That's right there. So on a weekly standpoint, the immediate decline may be vulnerable to 16.95. What does the daily chart look like? Well, that one looks even better, in my opinion. Here it is. Oh, that's the intraday. Here it is. So the 1618 extension of the near-term drop comes in just at 1708. I think I'll show you the intraday chart in a moment. But again, 1695. There's the 25% parallel. Near-term resistance, key resistance, bearish invalidation, 1845, the same level that we broke. That was the onset of this decline. We're below the 200-day moving average. We're below the median line. But coming into a big spot here. What does the intraday chart show? Well, same type of thing that you're looking at with the DXY. Momentum, getting kind of tired here into the lows. You got to break back above 30. Here's the rebound off of support. Here's the 1618 extension, right? This is the extension from the decline off the highs just that we made right here in February, not from the yearly high. So 1, 2, 3. That 1618 was 1706. We bottomed right there. It's the same setup, guys. Nothing's changed. So at this point, you're kind of looking for this near-term range break, resistance at 18, bearish invalidation at 1845, 1835, a break lower from here. You got a confluence region right near 1640, but it's really 1621. And the big zone on the downside beyond that is kind of pretty problematic if you get below 1621. Okay, that's the October 2018 highs. It's nice lows that we made here last year. Obviously a swing high here, major pivot in price. That would validate, in my humble opinion, again, a break of this longer term slope. So here's the pitchfork we've been following off of last year's low on the daily. If you get below 1621, Euro's in serious trouble. There's nothing to like 1490s. So into the start of the month, into the start of April trade, into non-farm payrolls tomorrow. Hell, I don't think you make a move like that, but if it were to break, that's sort of your last line in the sand to try to find support for euro. Any questions on euro dollar? This was it. Like, this was the big support zone. Okay, we missed it by like what, 8 pips, but let's see what happens into this zone. We really would need to sink below that to get a deeper drive here on the euro sell-off. So Sharif, here's dollar yen for you, man. Big breakout. It's at near-term levels, which may cause a pause, but here's the weekly chart, and this is the only thing that we've been sort of focused on for the last couple of weeks, is this whole sort of push and drive. First, it was into this region right around the 109 handle, which was downtrend, multi-year downtrend resistance and uptrend resistance earlier in the month. Here's the break this week. 109.90, 109.68 was our line in the sand. We pushed well through that. Next major lateral levels on the weekly charts are 1160 and 1198, basically 112. So from the weekly chart, from 1,000 feet up, you're sitting right mid-range. You're probably thinking to yourself, well, Mike, what the hell do I do here? If you're not already involved, there's nothing to do here, okay? If you're holding longs, the trade's still constructive above 109.90. Momentum is still in overbought. Remember, that condition suggests you continue to hold the long side. You don't want to bail on that until we start to break back below 70. So it looks like it's got more to go, Sharif. But the intraday, or when you get a little bit tighter on the daily charts, the picture shifts a little bit. I have 1120 as the high day close from back here in March of last year. Would have been great symmetry if we would have hit it a little bit closer here, but nonetheless, a high day close from that month comes in at 111.20, and then again 1160 and 112, that big zone. So what do you do here? You're deep and overbought. I'm not going to try to take a long from here. There's not enough justification, in my humble opinion, to try to short it. So for new positioning purposes, I think this one's on deck. If you're holding longs, like I said, you're just cleaning it up a little bit. The propensity still, in my humble opinion, still looking for 1120, 1160, but you know, you could get set back towards slope resistance, former slope resistance support, 110. You know, I don't want to get into 109.90, but you could still get there before you move off. Ultimately, I'm looking for 1120, 1160 on this stretch. Does that make sense, Sharif? Does that help? Let me know if you have any specific questions here on yen. It's been a while since I've had this type of conviction on this specific pair. Here's the 240s to give you a little bit broader review. Sharif says yes. All right, awesome, awesome. So yeah, no change to any of the dollar yen levels. We're still, you know, we're still just coiling up right here. And again, caution, caution, caution. We're in the start of a brand new month, of a brand new quarter. You have major U.S. event risk on tap tomorrow and an extended holiday break. So Europe is closed on Monday, guys, as well. So you're not going to really get that sort of holiday lull out of the way until we get into like Tuesday trade for our next webinar here on SB. So that's dollar yen. Kind of looking for this breakout, possibly to pull back a little bit, still constructive above 109.90. 111.60 is your first major upside target. Gold, here's number 4 with the gold trade. I was having a discussion with one of the guys, a friend of mine on the desks in New York, and they were asking, well, it was really just the one guy was asking, but both of them were kind of pressing me on whether this gold is whether this reversal is something bigger or whether it's just a bounce. So here's my take on this, guys. The breakdown that we were looking for essentially has materialized at this point. The three levels that we've been talking about since the start of the year were 1763, 1690, and the last one is 1650. Do we get the 1650 clip? That would be two equal legs off the high, suggesting that the entire correction from last year's high, or the entire move, was a correction in nature, and that we should be looking for basing near upslope support, basing near that 100% extension, basing near the 75% parallel. Was that it, or do we get the other drop? That's essentially what we're trying to gauge right here. Okay, and the weekly chart, you're sitting mid-range again. So there's not really much of a tell, as it were, here on the weekly. Key resistance still 1763, key support at least on the near term is still 1690. I would love to see a drop to get that fulfillment of two equal legs. Will we get it though? Here's the daily chart. So yesterday wasn't a full-on outside reversal candle, but boy, oh boy, did it try, right? All things held constant, if this was not the last day of the month, last day of the quarter, I'd be more inclined to suggest or have a little bit more of a constructive bias on this kind of reversal off of key support. And again, this is the 38.2 retracement of the entire advance off the lows you made in 2015. Huge. So where are we? Well, when things get a little bit murky like this, I like to take a step back. And what I told them was, well, let's just look at this on a monthly standpoint. Here's your monthly open. Here's your monthly range high. Here's your monthly range low. You set that in the first 8 days of March. Guys, we haven't even broken that range yet. So we can't make any assumptions that this is the low. We can't make any assumptions that we are still heading lower per se, but on a sort of objective basis, we're still in the March opening range. We're going to look for that next month. What else? Well, again, objectively, we're still in this descending formation. That's not up for debate either. What else? Broader, if you zoom out even more, we're still in this descending channel. So what am I trying to say? At this point, the focus for me on the immediate thrust here is whether we get exhaustion ahead of essentially 1734, 1735. 1734 is going to be the open for last month. 1735 is going to be the high day reversal close that you made mid-March there. So both of those converge on the descending slope. That's what we would need to break to sort of invalidate the immediate downside bias. Broader bearish inval is still 1767. That's what you would need to suggest, okay, we're straight up back on the resumptive path higher. So the immediate focus is on exhaustion, maybe a little bit higher from here, but we're looking for it. Here's what it looks like on the intraday chart. And here's what I showed you guys last night. So big rebound yesterday off of that 38.2, 1683. It says 1682, but I have 1683 written on there. I hope either way, I think the daily chart has a little bit more rounded figure. Nonetheless, here's the rebound, right? Here are the two levels we're talking about. On the immediate front, a 618 just of this near-term drop gives you 1625. And then again, there's 1733, 1736, the March high day close. It's going to be the March open. You know, I'd want to see failure here off one of these two levels if gold is moving lower. And I think this is a critical time period, both because, again, we're heading into that new month and that new quarter. You're going to be seeing people talking about what's going on in Bitcoin, and that's kind of been a stall, complete stall over the last month, has done nothing ever since that high. We've just been sitting here. You've seen that risk has started to not necessarily tail off, but a very similar scenario in that you're kind of just ranging, a little crawl higher. Dow saw a little bit of a turn yesterday. People were talking about that. Broader point is, for gold, I think this is going to be a very important tell on the reaction that we get if we push higher into this zone. Failure in this region, I think, puts 1650 in view. Okay, anything northbound of 1745, I don't want anything to do with it. I still have bearish inval up here. but anything above 1745, I think at that point you're risking a full-on reversal in gold. Any questions on this? Big implications heading into non-farm payroll, big implications heading into the first few days and few weeks here of the first of April trade and the second quarter. So gold, there she is, number 4. All right, so here is Kiwi, New Zealand dollar. So for the month, Kiwi was actually one of, well, for the month, yen was the biggest loser versus the dollar, but Kiwi also saw a pretty prominent decline. The trade has been sort of nothing this whole week. Here's where we started off. This was back on the 30th. We were talking about the weekly open setting up right above this key zone of support. That key zone of support is comprised by the 100% extension off the high, so 2 equal legs off the high that we made back in February, and the objective 2019 high, nothing fancy. So we grounded into that last week and we closed just above it. And here's, what we've been doing ever since. Here's the daily chart. Failed that near-term resistance 70, and we're kind of just right in this zone. So interesting tidbit, and we did touch on this yesterday, the fact that Kiwi collapsed through its yearly opening range low. Here's your yearly open, here's the range lows, and just dumped. Aussie didn't. And Aussie today did probe into a fresh yearly low, but it backed off pretty quick. So puts me into that, man, start of the month, start of the quarter, shoot, you gotta let the market sort of pan out into the opening range before we start taking these strong stances. Here's what Kiwi looked like again early in the week, and here's what it looks like now. There's not much change. Okay, so that's the 4-hour chart. Let me just do it side by side here so you can get a little bit more of a approach. And we've done a whole lot of nothing. We're still sitting over that support level. So I can't get excited about any Kiwi shorts, guys, until this breaks or you get a recovery back towards 70, 66, 71. Areas of interest for possible topside exhaustion, a break of 69, and you're looking for essentially 68, 67, 90, and the 618 comes in at 67, 60s. So similar scenario, could get a bit of a recovery, blow off, a little bit of a relief rally. Wouldn't want to see anything surpass 71. Downside, you're looking for 68 and 67, 60. Any questions on New Zealand dollar? So for Aussie, I mean, you're essentially looking at the same thing. For me, I think this one does mark a little bit more of a prominent risk for a near-term recovery. Here's Aussie on the daily chart. Here's Aussie on the weekly chart. This is the yearly range lows. This is basic slope support. We're there. Need to close below 75.60 to validate a break. Now on that trade for the Aussie, 2 equal legs, again, off the high, give you 74.63. So you can see in Kiwi, 2 equal legs off the high gives you 69. So you know what I'm saying? Maybe a little bit of recovery in both of these, but I'm looking for that last drive lower if possible. For Aussie, it would be a bigger break of not only the yearly range lows, but also uptrend support. That would be your first initial target in your 74.60s. So Aussie's at support. This could be a fake out here. Again, I think you have, if I'm not mistaken, the RBA on tap next week on the 6th. Hopefully gets a kick on volatility there, but coming into big support. Watch out here. All right, so that's number 5 and 6, Aussie and Kiwi and Aussie, I should say. Number 7 is Swissy. Here's dollar Swiss. We had an update on this earlier in the week, and I just wanted to highlight that we were coming into an area of interesting resistance, all the time frames, essentially. Swiss, you looked like it was heading to something super interesting at that 2016 low. Here's what it looked like on the weekly charts. Okay, there's your 2016 swing low, pretty much grounded out the decline that you saw in early 2017 before it dumped again the following year. Here we are. Current upslope, this is just basic trendline support off the low. A parallel extended off the high was right there. We're looking for reaction here this week. If we close below, adds that spice for the risk of a pullback, okay? If we close above, if you're holding longs, great. I wouldn't initiate new positioning because just higher is the 50, right into 95. So similar scenario, the dollar stretch is getting a little tired. Do I sound like a broken record, guys? I hope you guys aren't getting bored at home from this. But it's basically the name of the game heading into April trade and heading into the second quarter, which is great for us because these inflection points should produce something. Here's the 2016 low. We tried to exhaust through it yesterday, push through yesterday, exhausted. We're trying again here today. If we continue to close below 94.43, I think again, near term, you're at risk of a setback. You're getting radical divergence, obviously, price action at a much higher high, the oscillator with lower high. So broadly looking again for a near-term setback here to give us an opportunity to get back on the entry. I don't think you have the validation for the reversal just yet, but here's what it looks like on the intraday chart. Okay, this is one where I would be interested in tomorrow. If we get like a push higher, a spike, we get a 95 clip or even 95.30 for the upper parallel. That's, I think, where you'd be a little bit more of a conviction try, just for a near-term pullback, a fade of the initial move. But all things held constant, it's been a pretty one-way trip. We're testing trend resistance just a bit higher. So if there's a theme on all the major crosses today for the dollar crosses we've been covering, it's hesitation, getting into an area of which could see a little bit more back and forth before the broader resumption of the trade there. So that is dollar Swiss. No change to any of those levels. We covered gold, Aussie. So I did cover Aussie, but I just want to show you the side by side of our last update. Here's where that is right now. So we didn't quite get this stretch into the upper parallel. We failed just ahead of it early in the week. The break lower did tag 75.63, and we're just below the median line. So we're just like around here right now. What you don't see on this chart is this, the daily, this broader upslope. And that's what gets me concerned, that 75.60 level. We'd need to see a assertive daily and weekly, to be honest with you, close below. Okay, last two here. Loonie, here's dollar CAD. Oh, dollar CAD. I haven't touched this week. I've been wanting to be long. Okay, every time it looks like we're coming into support level, there is no signals whatsoever and it sinks lower. I'm really indifferent on this one. There's really, I'm neutral. Here's dollar CAD, guys, on the weekly charts, just to put things in perspective. That huge pivot, this is why I can't get excited. Okay, 26.19 is the upper side of that range. 25.80 is the bottom end of that range. Here's what we're doing. What do you want to do with that? If this is a legit break and this is just a test of resistance, this could be it and we're off to the races. I don't want to be trying to fade, be in a long position in that scenario. So I'm gonna need, and what I've been looking for the last 2 weeks is just a freaking close above this zone, a weekly close somewhere here to put us on track that this could be just a dip, false break of support, and then you get a larger recovery. The high we closed for the year is 27.70. It's not even that far, right? But I can't get excited until we sort of mount this again. All things held constant, this could just be a break of support, test a former supporter's resistance, and like I said, move off. So what happened this week? Well, we rebounded into that zone last week, and then we just completely stalled. We did an outside day reversal higher into this region, which I usually tell you guys is exhaustion. For the next 3 days, we capitulated. Again, tried to push higher, even closed right above. What was the close there on a daily basis? Was like 26, 27, 10 pips higher. That failed. So look, I'm not, really, there's no conviction here either direction. Put a pistol to my head, I'll blow your brains off, Boutros, unless you're telling me what you think. I'd say you probably get another drive, but then that does eventually recover. Remember, guys, bottoms are never easy. Sometimes they're very prolonged processes. And while there's no conviction here to get short, I don't see a conviction to get long either. So it's on the shelf. It's on deck. It's on deck. Here's the 2 hour. The only difference from that update, guys, is the retracement. So these retracement levels were based on this high. We registered a new high yesterday, right? So this is the new, just move that retracement a little bit higher. It's the only shift that you see. So, again, constructive above 25, 24.85 if you do correct lower. Topside levels that we've been looking for, if we do rupture 26, 26.16 on a closed basis is 26.65, and the big one is 27.13, 27.20. Questions on Looney? Sharif says, can you talk about trade size aspect? You tweet about what's the trade size of one? Doesn't your trade size depend on the amount you're looking to risk? Is there an article on SB that I can read to understand your trade size strategy? Absolutely, Sharif. Yeah, that's part of the swing strategy that Jamie's managing here. So definitely in our trades, and certainly on the trade side on Jamie's page. So on the long-term page, watch this video. He walks you through how to read that report, what that trade size means. That's just a ratio, right? 1x, 2x, whatever your trade size is. But as far as the stops, we're always taking that into account. So your trade size, Sharif, and your stops are two different things. What you might hear me talking about oftentimes during these crossovers for the month and quarter is to reduce your trade size. So if you're trading 1x, I'm typically trading half x or a third of x during this time period where you have a whole lot of end of market, end of month flows that really jack up the intraday. But definitely, Sharif, go through that video. He goes through that exact question that you're asking. All right, questions on Looney. Here's sterling. So for the British pound, it's been a weekly opening range scenario also that never broke. Remember, for the sterling, that break that we saw last week was a break of up channel support dating back to November. It was a break of the monthly opening range for March. And you look for a late month close or a low close near the month, that's where we are. So when you trade, Sharif is asking, your risk isn't consistent on every trade. For example, 1%. So it's not necessarily managed by the percentage base, Sharif, right? I don't get into a trade, Sharif, and say I'm looking for, I'm looking for 50 pips. I'm only going to risk 10. No, the stop is always based on a technical feature. If that technical feature is within your risk tolerance, then you assess the trade. You know what I mean? So if you're working to, for example, if you're working with a 2-to-1 risk ratio, I'm just getting basic as can be, Sharif, and I'm looking for 2-to-1. If my stop by technicals has to be defined at the low, if my limit isn't fulfilling that 2-to-1, I don't take it. You don't adjust your stop based on the risk to reward ratio. You have your risk to reward ratio. You assess the stop. Does that fall into the proper percentages? Sharif, am I making sense? I hope I'm not confusing anyone in the room. We got a lot of guys in here today. but it's just a change of mentality. A lot of people work with that ratio and then they're looking for X pips, so they're risking Y. No, no, no. The risk needs to be based on what the technicals and price action are saying. So let me know if I need to elaborate on that a little more. But definitely, I would be, guys. Jamie's been doing Friday webinars, so I would definitely be joining him and kind of probe him on exactly what that question you have is. Maybe he can explain it a little bit better, Sharif. But for sterling, the issue here is, does this recovery, again, do we get the pump back towards slope resistance, or is this just capitulation and a break of former slope resistance, and we're checking it as support? Here's what the intraday looks like. At the end of the day, max 38.84, 38.80. That's the breakout zone. As I told you guys yesterday, I'm broadly constructive on sterling. I think of all the dollar crosses, sterling actually has the best bet. If there is a collapse or if there is a pullback, this will be the most resilient for the greenback, for the sterling rather. So if this is just a corrective stance, you still see 38.80 before it turns over again. All things held constant, this is just a weekly opening range that never gave out. So neutral on sterling. I think the long side, any recoveries are at risk ahead of 38.88. Ultimately, I do think sterling's a buy, but I just don't think this correction is over yet. So maybe a deeper cut before we start to move higher. All really early month stuff, guys. If I sound a little bit less, there's less conviction on these, it's because of the time period and the environment that we're trading within. I think that starts to clear up as you pass through this holiday weekend and we get the opening ranges starting to pan out. Last but not least, just a quick note on peso, just because we were talking about this. We're at support. We're at support, and we're at support. That is noted by 2028 into 2034. We're there now. That's a 618 extension off the high, 618 retracement off the low for the yearly range, and certainly is the range lows for March thus far. So we're looking for inflection here. Again, maybe a decent tell on the dollar story if it does break down. They do see a little bit larger correction in the greenback before the resumptive move, but I will leave that there. Any other questions or trade setups you guys want to review? That's everything that's on my list. A couple of quick notes next week. SPX and crude. Yeah, Pete, I got you. A couple of quick notes next week. It's my daughter's spring break, so I will be off Wednesday, Thursday, and Friday. So we'll have our webinar on Tuesday here on SB. Monday's webinar will be canceled on Daily FX because of Ascension Monday in Europe, but we'll be back here on Tuesday next week. SPX at this point, Pete, it's all slope, man. There's no lateral levels until you get into like 40.79. That's the last measured move I have. Yeah, I mean, look, it's the start of the month, Pete. If I were to look at this objectively, I would note two things. I would note A, obviously you're seeing some divergence in momentum, but again, divergence can last for weeks. That's not necessarily the trade. But if this is a break of the objective monthly opening range highs, the record highs for the year, you would want to see acceleration today. So Pete, my point is, if we don't start to see this thing rip higher into the US Open, I'd be cautious. Even if it pulls back like crazy, you're still constructive while within this formation. You're still constructive above 39.21. But from the momentum profile, the way things have been panning out, I would have expected this break to unleash something a little bit bigger than this. So we'll have to see how this pans out today. For crude prices, I think that's a similar scenario. I think you get a whole lot of chop, you get a whole lot of sideways action. I am constructive crude long term. Near term is the correction off the high over. I don't know. And in fact, I think we talked about this on the webinar. I'm not sure who was asking about it last week, but this to me looks like it could be a 1, 2, 3, 4, 5, denoting a larger reversal in trend which means you would look for a sort of a three-wave advance before a larger dump. If that interpretation is correct, you're still at risk essentially below 63.85. But yeah, I think there's a lot of noise here, Pete, and I think there's going to be a lot of noise in crude. There's just so much, aside from all the geopolitical stuff, which is still massive. Um, you've got the implications of the new administration, the policy positions that they've taken. I just don't see that this thing could dump too aggressively lower. But with the same respect, let's see if there's anything here. I just want to see what this looks like. Bear with me one sec, guys. Nope. So it could be a simple bear flag, or a bull flag rather, Pete. Let me consider one more thing. Bear with me one more moment. Yeah. So the breakout level would be right here into 63.85. That's my opinion. So you have two levels. Let me extend that. You have the high day close at 64.55, and you have this phenomenal, my favorite Fibonacci confluence is a 618 off the high and 100 off the low. Gives you 63.70, 63.85. That's sort of your breakout region for the resumptive trade. While below, yeah, I still think you can wash out a little lower. And that corresponds, P, with the mentalities. If the dollar gets a little bit more of a kick, if we get a little bit push higher in the dollar, and certainly everyone heading into the start of this month, guys, will be looking at this. So keep your eyes on the 10-year, right? Oh, treasuries, treasuries, treasuries. Well, today we're actually almost poised to post an outside day reversal. So if the dollar does take a little bit of a breather, sure, we could get the resumptive trade in crude, but if we are going to get this little near-term correction or pullback, exhaustive trade in the dollar, yeah, I think you could see that pump towards 63.70s again. So a lot of these calls, guys, are really the hesitation is where we are in time. I hate trading into the quarterly monthly opens. Over my 20 years, it's just been the worst trades. So just use caution here. I tend not to trust what I see, but all things held constant, yeah, sure, the risk into 63.70, but still would be a bearish trade. Make sense? Pete says, thank you. Have a great weekend. Hey, same to you, Pete. Agnes wants to look at Aussie yen. Let's take a quick look there. So this thing kind of like broke out of this I was watching this, someone, I don't think it was someone in a webinar. I think someone on Daily Effects, one of the interns was asking about this. This is kind of just an eyed pitchfork with this slope here, but was that just a false break? Resistance, resistance, break. Now it's support again. Not my cup of tea. I do favor broadly longer term a higher Aussie yen, but I think here you're at risk. And I think that's the risk that you'll see also pretty prominent on some of the risk assets as well, whether it's equities or some of the yields that we've been looking at. The monthly opening range is intact from March. I don't even want to say the word head and shoulders because people are saying that already, and it's just there's nothing there yet. I mean, the shoulder crack wouldn't even be in play until we get back below like 82. But I am looking for exhaustion. I do think you risk exhaustion. Let me just see one thing here. So that was the 618. So again, not to get too in the weeds with you here, Agnes, but it looks like I'm just eyeing this out. It looks like a 1, 2, 3, 1, 2, 3, 4, 5. So I would be on the lookout for one last dump, one last exhaustion to give way. We'd have to reassess, but yeah, I wouldn't be bullish here. I wouldn't be bullish here. And again, anytime you run into one of these trades, guys, be objective as you can. Agnes, the weekly opening range never gave out. Here's your Monday, here's your open. Monday low, Tuesday high. I mean, you tried to break it, but never closed above. Tried to break the lows, never closed above. You know, that kind of trade, that's as clear as an opening range break that you get. Thank you so much. Perfect, says Agnes. Cheers, always a pleasure. Bitcoin Sharif looks like this. Man, you know, let me not say the only. Bitcoin has actually been insanely clean. We've been talking about this trade here. Look at the magnitude and how long this formation held before this break last week. When that break materialized, what was the level that we were all talking about as soon as that broke? Well, 5187 is the 618. The 100 off the high, if it was just corrective, would have given me 51,600. Boom, landed right there, reversed. So this channel, which I was watching all week, pitiful break, rebounded, even tested the channel as support. And what the heck is this? No momentum. You're still below the high day close. What do you do, Sharif? What do you do with this? There's nothing here for me. There's nothing here for me. I'm not buying at the high. There's not enough of a signal to try to short it yet. You're not near a near-term lateral level. If you put a pistol to my head, I think it does move higher, but then it fades again. Yeah, not my cup of tea here. Not my cup of tea. Loved the break. Loved the rebound off support. This, I don't know. You're still getting divergence again into the highs. Could go range bound for a while, but certainly not the break you would want to see if it was a simple bull flag. You know what I mean? So you need to wait on clarity here too, brother. There's just we don't have it. Here's the daily chart. Why do you use log? So I use log on Bitcoin because the range is so huge. So when you're looking at a trend like this, when you're going from a you know a $5,000 range to a $50,000 range, if we take it off and put it into arithmetic, it gets all jacked up. It gets all jacked up because your scale is so crunched. When you put into log, puts things into a little bit better of a view in that you have a better idea of price action within on a percentage-based move. Does that make sense? It's just because of the range of the scale that you're talking about. If we're talking about 1 to 100, it's different. When you're talking about 5 to 5,000, it'll skew it. He says, thanks, more than welcome, more than welcome. All right, guys, so we'll go ahead and wrap things up there. I want to wish everyone a happy and blessed holiday if you guys are celebrating this break. Best of luck trading. Stay light, stay nimble. If you're not in anything major, close up your book and enjoy your family for the next couple of days. April is set to be a doozy with everything that's going on and where all these trades are. Man, I'm super excited for this month. So have a great weekend, guys. I will see you again. Reminder, there's no webinar on Monday for the holiday. I will be back right here on SB on Tuesday morning, 8:30 Eastern. Till then, best of luck trading. Have an awesome weekend, guys. Cheers.